And the Naira continues its losing streak this week, recording marginal depreciation against the US dollar. Meanwhile, in the fixed income market, average yields in the T-bills secondary market are down marginally due to buy pressure across the curve. Emmanuel Odiaka, CEO of ECOB Capital, joins me now for the movements and the outlook for the fixed income and FX market. Emmanuel, thank you for taking the time out to join us today.
Thank you for having me, Esther.
Well, let's start with the Naira. We have seen it slipping against the United States dollar in the last couple of days, trading right now at just over 1,500 Naira to the greenback at the official market. But we've heard comments coming from the CBN governor recently saying that the worst of the volatility at the currency market is over. But what are your thoughts on those comments? And also, are we any closer to determining the true value of the Naira against the dollar?
Thank you once again for having me, Esther. On the flip side, it seems as though whenever the Apex Bank governor talks about the currency, we start seeing some depreciation in the Naira. But putting that aside, yes, the Naira has been steady. Kudos to the CBN governor lately over its monetary policy tightening. Yes, we are certainly going to see some movement within this range, and the Naira seems obviously to have steadied within the threshold of 1,485 to 1,500. But now we are seeing it springing up. Yesterday, traders as low as 1,520 to the greenback, but it's cooling off today, Esther, and we are seeing it trend lower to 1,515. I think going forward, Nigerians are mindful, going by the events earlier in the year when the Naira touched a touching distance high of 1,982 or thereabout. People are no longer too keen to speculate on the Naira once it touches the 1,500 benchmark.
Right. So, I mean, going back to my question, what we have now is a range from what you just said, somewhere between 1,400 and 1,500 in terms of the the trading band, the true value, if I could use that phrase, of the Naira against the dollar.
Yes, we are seeing a trading band within that 1,485 to 1,500 threshold. And we think it's going to be sustained at that level for the foreseeable future.
What about liquidity, levels of liquidity at the market? The CBN governor also did say that liquidity has come back into the market. He was citing inflow recorded in the first quarter of this year at about $24 billion. And he doesn't seem worried about liquidity levels at the market, and says that he's confident that where the reserves are today, is fully sufficient to continue to help boost the Naira, and also inflows, I guess remittances and some other sources are also helping to maintain some good levels of liquidity at the market. But what are your thoughts?
Yes, talking about the present reserve levels printed by the Apex Bank, that's still a debatable figure. But with what market has done lately, market has shown that it's comfortable trading within this bank. There has obviously been some liquidity. That's why we have not seen demand pressures pushing the Naira far much lower than where it's trading as at today. So the market is showing some resilience. It's showing that the supply side and demand sides are agreeing at some points of equilibrium. Whether it will be sustained at this level is a matter of a waiting period.
Right, we'll continue to keep our eyes on that. Let's move on. Let's talk about debt. That continues to be a top conversation, obviously in the country. Let's talk about, we're also expecting that, we're also expecting the supplementary budget put at just over 6.6 trillion Naira. But of course, we've been talking a lot about current debt levels, especially the total public debt. We've been talking about debt servicing costs, which has been costing this particular administration a lot. So we've seen the yields at the fixed income markets, 26% effective yields, and obviously those borrowings have cost implications for the government and for the budget. But what are your thoughts in terms of where we are right now with our debt levels, what we are hoping to make in terms of domestic revenue mobilization versus the revenue versus the debt servicing costs that the government has on its books?
Well, it does look like the present government is not concerned about its debt servicing cost, which is almost at a 7-point-something trillion in the 2024 budget, which that is a little bit very concerning, considering that deficits also on that same budget, 2024, is about 9 trillion plus. Considering also that we are now talking about a supplementary budget of 6.6, which government has earmarked for 4 major projects, they call major important projects, one of which might speculatively be the purchase of presidential jet for both the president and his vice president, the counterpart funding for the Lagos-Calabar Coastal Road, the Sokoto-Badagry Road, and counterpart funding for completion of the railway lines across the nation. This looks good for capital projects funding. Questions about if we really do need a presidential jet right now, as to maintaining the ones we have on ground. Yes, Esther, debts are in an alarming situation, and considering that the Debt Management Authority is now issuing both short-term and long-term debts of up to 28% effective yield on the open market operations and about 26% on the Nigerian Treasury bill issuance, it's much more worrying. I think we are kicking the can into the future here, and there has to be fiscal discipline going forward. Well, we agree that there should be improvement in government revenue, but the government should also look at productive sectors to shore up its own revenue base, as against targeting tax and overburdening the Nigerian citizens on tax reforms.
All right. I mean, you're absolutely right. Funding production and not funding consumption. We have just about 1 minute left. The CBN governor has said, look, we're not going, Nigeria doesn't need to go to the IMF, and it's at least not yet. We have seen, we've seen, we know that the IMF usually comes with some very difficult, prescriptions in terms of what the government would need to do to attain such loans. But what are your thoughts in terms of us, Nigeria versus IMF, if we will need? We know that there's, I believe, over 2 billion in loans from the World Bank coming in. But what are your thoughts on, multilateral loans?
Well, multilateral loans are good in the sense that they are long-term and they come at very cheaper cost, as against going to the capital market for Euro bonds, which could print at present market levels of more than 10%. I don't think we want to add that to our debt burden. Luckily, the Debt Management Authority is doing very well. They've done more than 70% of its deficit financing and other associated debt revenues that they needed to raise this year, with yields printing at about 28% on the short end of the curve and 21.5% with the recent bond issuance. I think the domestic base is supporting government deficit funding.
Right, Emmanuel, we're going to have to leave it there. Thank you so much for sharing that insight with us today, sharing your thoughts with us. We appreciate it. Emmanuel Odiaka, CEO at ECOB Capital.